Hello. Welcome to the Economics Explored live stream for Friday, the 17th of December. It's good to be here with you, and I've got Tim Hughes joining me, my regular co-host. Tim.
Hello. Hey, Gene. How are you?
Good, thanks. Good to be chatting with you again, Tim, about the topical economic issues of the week. So I thought we would have a chat first about the big news that's come through about the Bank of England. So the UK Central Bank, it has put up its policy rate, its policy interest rate, so the short-term interest rate that is called bank rate. So let's just bring up those policy rates here. So we've got a chart there where we're looking at the policy rates of some of the central banks. I was going to say major central banks around the world, and I realised I had New Zealand on there. But New Zealand's often seen as one that's that is often ahead of the curve, or it's they're quite advanced in their thinking. So I mean, New Zealand's not a major economy by any means. They've got 5 million people.
That hole's getting deeper, Gene.
Sorry, I'm sorry if you're a Kiwi.
Our friends over
I've upset
the
you.
pond.
Sorry, our cousins across over the other side of the pond. But anyway, New Zealand's, they've been jacking their policy interest rate up because they're concerned about inflation, and so they've pushed it up to 0.75. Bank of England's just pushed up bank rate from 0.1% to 0.25%. And there's now talk about, because of what's happening in the US, that the Federal Reserve will push up its target rate 3 times next year. So there's news about that. Australia, we've still got our policy rate, our cash rate set at 0.1%, and the Reserve Bank, it's trying to signal that it doesn't want to lift the cash rate because it wants to make sure that the economy fully recovers from the pandemic, and it doesn't want to be lifting the cash rate next year. Of course, the risk there is, what if we have inflation accelerate as it has been in some of these other economies? Then they may be acting too late. So that's one thing that we need to be conscious of. So, so big news about the Bank of England.
So those rates were always going to go up. They couldn't. It was just a matter of when, yeah?
Well, there's actually a floor. I mean, they can't be negative, right? So there's they almost, there's a zero lower bound they talk about.
Yeah.
So there's only they reach that, and so they can only really go up from here. I mean, these are historically low interest rates. So for centuries, I think bank rate was about 5% or something? I mean, typically you've had interest rates of that sort of, in that range of 4 to 5%. So these low rates we've had in the last decade or so have just been historically unprecedented.
It was up to 18% in the 80s, is that right? I know it was very high.
In Australia, yeah. And I mean, inflation was higher then. So we had inflation through the year about 10% or whatever it was. So yeah, exactly. So that's what's happening with bank rate, and the reason is that they've got to try to get ahead of maybe they're behind, but they've got to get on top of this inflation situation, the accelerating inflation in the UK. And there was new data that came out this week that showed that headline CPI inflation through the year, so the change over the 12 months to November, that's come in at over 5%. So Bank of England's going to be conscious about that. Now, what I found quite surprising was that when the AFR wrote this up, I saw it this morning, they said, Bank of England springs interest rate surprise, ECB holds fire. Now, I would have thought that given the inflation situation that we're seeing, this accelerating inflation in the UK, you wouldn't be surprised about this interest rate increase in England, in the UK. But perhaps there was a surprise because, there was a reading of this Purchasers Managers Index. So this was one indicator this is an indicator that is quite widely watched. It's purchasing intentions from people in business, and that's come down a bit. and I think it's a 10-month low or something it's been reported at. And there are people thinking, well, okay, that's signalling some sort of softening in the economy. And then you've got concerns about Omicron in the UK. Boris Johnson is saying that he's not going to lock down, though. So he's going to keep the economy open as long as he can. But look, the thing we've sort of learned with COVID is that events can overtake you. So we'll just see what happens there. Although, I mean, the public acceptance of lockdowns has really just gone away, hasn't it? So maybe they wouldn't do.
It's massive rates over there. I think it's like 80,000 a day. It's such an easily transmissible strain, the Omicron. But hopefully they can stay open and deal with it. It's all about the hospitalizations and the ICU numbers and the deaths, obviously. So the cases are something that's a concern. But that's the same for everyone, everywhere. Everyone's trying to stay open. We've just opened up here in Queensland, in Australia. We've only been open a week. And
we've already brought the mask mandate back in.
It's common sense. I mean, that's fair enough. I think, it's one of the first lines of defence, and it's a fairly simple one. So I think that's fair enough. And then it's down to everyone's, choice as to whether they go out or not.
I don't think it's this is not medical advice, but I think certainly it's going to slow it could reduce the risk of transmission to an extent and slow the spread to an extent, but ultimately practically everyone's going to get exposed to this at some stage. I think that's what the medical science is telling us. And it's just a matter of time. But anyway, who knows? I'm not a public health expert.
Same. But it's interesting from the UK because they're ahead of us here. And so we can certainly learn from all those countries who are a few steps ahead by what they're experiencing, and there do seem to be massive case numbers. But I think it is if they can hold their nerve and stay open, it's a case of trying to ride out that next wave with hopefully good outcomes.
Yeah, absolutely. Okay, so that's UK PMI, and so that's why some people might have been thinking the Bank of England move was a surprise. And I mentioned the Fed, so the US Fed, it's signalling that it's going to start tightening in next year. There could be 3 interest rate rises. There's talk of, there's all the talk about tapering and pulling back on its bond purchases and all of that. So it looks like the Federal Reserve is concerned about, it's certainly concerned about inflation. We had some high inflation numbers in the States in recent months, and we've talked about that on this show before.
Yep.
So, big concern in other countries, less so of a concern in Australia, or maybe it's the case that our policymakers are too complacent. We will have to see. There were the budget updates that came out yesterday from the Australian Treasury. So, Josh Frydenberg, our Treasurer, released that budget update. And if you look at the forecast there, they're basically forecasting reasonable growth over the next few years and inflation relatively moderate within the Reserve Bank's target band of 2 to 3%, which would suggest that the Treasury is not expecting that we're going to have inflation get out of control, which then might lead the Reserve Bank to massively hike interest rates. So, different situation in other countries where inflation does seem to be accelerating more than may have been expected. Although if you did look at just all of the stimulus that's occurred, the money printing, then perhaps you would expect it. So this is something we've talked about on the show before.
It is. It's interesting, seeing it play out, because it is cyclical, I guess, or it's something. It's not anything that hasn't happened before.
That's right. It has happened before. It's just that we've got used to having low inflation. We were in this period. We've had decades of relatively low inflation, or at least in the advanced economies, and so it's
You're
not
including
something.
New Zealand in that one too.
Oh yes, there's certainly an advanced economy. I just wouldn't classify them as a major economy. Sorry, New Zealand. Okay, so we're in the G20. New Zealand's not in the G20.
Okay.
As far as I'm aware, as far as I remember.
I'm all for the G20 one. Bring in New Zealand.
Right. Okay. They might need a much bigger population. I think, doesn't Queensland have more people in it than New Zealand?
There's something like that. Like one of the highest populations of Kiwis is Brisbane or Melbourne or Sydney or something.
Yeah, yeah. Anyway, we'll stop the New Zealand bashing.
No, love the Kiwis. Love the Kiwis.
We do. Okay. Right. The other inflation issue I wanted to talk about was what's going on in Turkey. And Turkey's got inflation of over 20%. Now, the reason I'm bringing this up, I mean, I wouldn't normally talk about Turkey, given I'm not as familiar with the Turkish economy as I am with, say, the Australian or US or UK economies. But what's interesting about this is that, they've had this high inflation and they've had this interesting or rather bizarre policy response to it, which is that Turkey's going to raise the minimum wage by 50% to help workers hit by soaring inflation. So the risk here is that that's going to further encourage inflation or further fuel inflation. I mean, you could end up with this inflationary spiral. So there are a lot of people skeptical about this move. So yeah, the Turkish economy is they're in all sorts of strife over there. Unfortunately, big country and important country in that part of the world. What they've had is a depreciation of their exchange rate, and so that's going to be contributing to the inflation because the cost of imported goods is rising. So I've just learned about this recently. I've got to delve into exactly what's going on, but what you see is that this is the Turkish currency, which I think is the lira. That's gone from around. So back in September, you only needed to trade 8 to 9 lira to get $1, but now you need to trade 15 to 16 to get $1. So that's a big depreciation of that currency.
And I'm not an expert with any major economy, but I do have a bit of experience going to Turkey in 1997. And I remember at that time, their inflation was out of control. And you may find that, so for instance, it was lira, but that might be thousands of lira because I remember taking a photograph in the ferry on the way over from Greece, and it was 1 million lira for a cup of tea. Like it was that kind of thing. There were so many zeros you would get lost, and it was hard to keep up with the whole deal with the different currencies and the amount of notes and the denominations and everything. So,
let me check
I don't think
that.
it's the first time.
Let me check that. I better make sure that that's right. So I pulled that off the Macrobond database this morning. What sometimes happens, Tim, with countries when they do have ridiculous inflation, you just pass a law that says we're just going to chop 6 zeros.
Yeah, I think that's what they ended up doing.
Prices. I don't know if they did that here, but they've done that in other countries. You just go, look, prices are out of control. We'll just cut 6 zeros. Or when prices are quoted, it's just assumed they're quoted in thousands. Yeah, or millions or whatever. Okay, so that's Turkey.
We've done that with calories, for instance. Like we recognise a calorie as a unit, but it's actually a kilocalorie. It's 1,000.
I did not know that.
There you go.
Okay, I didn't know that. That's interesting. I'll have to investigate that. Okay, so the one other thing I want to talk about with the UK, Tim, I'll just stop the share of this for a little bit. Have you heard about this UK-Australia free trade agreement, which is fascinating? I mean, great news.
UK-Australia?
Yeah.
Yes.
Yeah, that was announced just a couple of hours ago, so I'm still getting my head around exactly what's involved.
So this was announced earlier in the year, but it's just the details that have been knotted out then, yeah?
That's right, yes, it was announced earlier in the year, that's right, and there's some more...
About halfway through the year.
Yeah, well, I think apparently it's gone from being an in-principle agreement to an actual agreement. And so while, in terms of trade, the UK is not a major export destination for Australia, so it's not really that big a deal from a macroeconomic perspective. But where it is, what I think is a big deal is just the opening up of the UK labour market to Australians. And they're saying that if you're a an Australian under 35, which sadly rules us out, I think, Tim. Just missed out on that. You've got easy access to the UK labour market. You just go over there and work without. I mean, there's an easier visa arrangement,
which is great.
And there's the same thing for Brits coming over here. Yeah, so we may end up seeing more of your countrymen. I mean, I know you're an Australian citizen now, but more people from the UK.
I've got dual citizenship, which is very lucky. But and I enjoy having that. Like, it's a real privilege to be able to have those freedoms in both countries. But I understand it's not always been easy or straightforward. Sometimes, if you wanted to work in either of the countries, you get a working holiday visa for 2 years, and that was generally it. You might get an extension. But that was pretty much it. And I think it had to be 30 or under. That used to be it for some time. So I think this is great.
Yeah, I think so too. I've just got to look more into the detail because I just learned about it earlier today. And I think it's that 35-year, I think that's the threshold. And this is important because one point that Louise, so when I had the chat about the Great Resignation a few weeks ago with Louise and Anthony from Remedy Recruitment, so they're around the corner here at the Johnson where we're broadcasting. One of the points Louise made is that as we open up internationally, what we might see is people, they think, well, we can finally travel, or let's go work in the UK. Let's go work as a lawyer or an accountant or a business analyst or whatever, or even a plumber or whatever in the UK. We'll head over.
So scrapping import tariffs to see there. So that can only be good news for the wine industry, I'd imagine. Like, I know that a lot of wine goes over to the UK.
Yeah.
They like their wine over there.
Yeah, they do. You can buy it in the grocery stores there too, can't you?
Petrol stations, everywhere.
Yeah.
You can't avoid it. In fact, it's compulsory. Every time you go out, you have to buy something.
Right.
Why can't we buy it in the supermarkets here? Is that
in
just
Queensland,
Queensland
regulation,
thing? Government
regulation.
Okay, why? Like, it just seems odd.
Well, it is odd. I mean, historically, it was because we thought, well, I mean, there could be legitimate policy reasons for restricting the availability of alcohol to an extent. I mean, you don't want outright prohibition because there's going to be problems with that. But you could argue that there's some scope for limiting access to alcohol, given that as a society, or on average, maybe we drink too much, or some people abuse alcohol. So you can see naturally why there would be some restrictions on availability of supply. But I think now what it is just, I mean, there's probably, it could be people in the industry. I mean, who's going to benefit from it? Woolies and Coles. I know they own a lot of the liquor, the bottle shops already, but it might be the independent traders or the independent bottle shops and the pubs and clubs that don't want Woolies and Coles selling liquor. I don't know. That could be what's going on. I mean, I'd be in favour of having them sell it. But what you have, this is a concept that it's come up in the States. They talk about it in the States a lot. And Darren Brady Nelson, who's a good friend of mine and has been on the podcast, the audio podcast quite a few times, he talks about bootleggers and Baptists. That some people are in favour of restrictions because they're Baptists, because they think, oh, well, we want to restrict alcohol because alcohol's evil and leads people to do, to commit sin and all of that.
And the bootleggers...
And they're in favour of restrictions because it means that they can bootleg. Or they could... Yeah, so it's
moonshine.
So it's that idea of bootleggers and Baptists. That's a bit of a tangent. Right, so that's the UK FTA. So we'll wait and see how that goes and whether we have a flourishing of that relationship, that two-way relationship with the UK. I mean, I'm all for it. So good stuff. Okay, Tim, we should get back to the slides, and I've got
impressive slides today, Gene, I have to say.
Thanks, Tim. Well, I'm quite lucky. These Macrobond guys keep sending me interesting charts. There's a great chart they've sent me a bit later on, which I will show you. But I just want to talk briefly about the labour force data which came out for Australia yesterday, so we had the big rebound in jobs. I think it was over 300,000 or something jobs in November. Oh, even more. Employment source 366,000 in November. So that's with New South Wales and Victoria coming out of lockdown, people getting back to work. Unemployment rate for Australia 4.6%, right? I mean, absolutely incredible.
It's pretty good.
And we've talked about this before. I mean, pre-COVID, you wouldn't be thinking we'd be talking about a 4.6% unemployment rate, or maybe sometime in the future, but it's not something we've been used to. But it's because we've really turned off that immigration from overseas, which was adding to the labour supply.
Yeah.
Now, that's not necessarily... It doesn't necessarily follow that, therefore we shouldn't have immigration, but it's just... I'm just making the observation that that was clearly playing a role in keeping that unemployment rate up above 5%.
Yeah.
Yeah. So I think that's quite interesting. Okay, so where are we relative to other countries? Well, we're not as what have I got there? The US. I mean, what's extraordinary about the US is just how flexible that labour market is, and just how much variability there is in that unemployment rate. I mean, that looks like it's down below 4%. I'll have to check those data, but that's on the chart. And UK, I mean, similarly lower than Australia. So, yes, the good news about the Australian unemployment rate coming down and strong jobs growth.
It's a massive spike, isn't it, for the States?
With the US, yeah.
In April.
Well, basically what happened is that, all these people, they've just lost their jobs when there was all the concern about COVID.
Yeah.
So, yeah, absolutely. Huge shock. Okay, finally, what I wanted to show you was this chart that came from the macro bond people. So they have a chart of the week. And this is showing all of these different commodities or assets that from time to time people have said they were in a bubble, and it's indexed the value of it to when it started allegedly going into a bubble, and it just shows just how much more massive the growth in the value of Bitcoin is relative to these other things that at different times were thought have been in bubbles, such as gold or the Nikkei or the, what else have they got? Biotech stocks, or so FANG, that Facebook, Amazon, Apple, Netflix, Google, all these other sort of assets, and it's just illustrating just how incredible that growth in Bitcoin has been. Now we've had it come off in the last week or so. But still, I mean, it's massively increased relative to what it's been in the past. And I mean, even when it was $20,000, I thought it was out of control. And now it's even higher than that. So anyway, all very interesting. So I thought that was an interesting chart from those guys. So I'll take that off. So Tim, coming to the end of this live stream, do you have any thoughts, any questions? Any comments?
No, I think it's interesting. So many things are unfolding at the moment, and it's as well. For instance, here in Queensland, like I said, we've just recently opened up the borders and opened up everything. So we're starting to experience increased case numbers for the first time in many regards. Like, we've contained it so well. So this is a very new period for us, and time is, time will tell exactly how it all pans out. But I've got no doubt we'll be in a better place globally, hopefully in 6 months' time with pandemic issues, and that no doubt will reflect in finance markets and employment and all the things we're talking about today. And so it'll be, it's looking shaky at times, but very positive as a general overview of next year. I think the first half could be shaky, but the second half should be strong. That's my prediction, putting it out there now.
Okay. None of us has a crystal ball, unfortunately.
But it seems to be starting, there's some positive signs.
Well,
there.
there's a lot of optimism about the Australian economy at the moment. We had those high job vacancy numbers we've seen and those strong employment numbers for November. The budget forecasts are very positive. So, yeah. And everyone's moving to Queensland where we are. So 31,000 more people in net terms from interstate migration into Queensland over the last financial year.
Yeah, and that's with borders closed,
Yeah, exactly. So open borders, everyone's going to come to Queensland.
There's plenty of room. It's a beautiful place.
Absolutely. Okay, Tim Hughes, thanks for the conversation today. Really enjoyed it. And thank you for watching. Gene. We really enjoy having you watch the live stream and hope you've got something out of it. Okay, if you've got any questions, comments or suggestions, please send them to contact@economicsexplored.com. Thanks for watching.
Thank you.